Crypto Trader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.
Markets traded under 500 billion ahead of another futures close. Bitcoin goes on a run in anticipation of the Bitcoin private fork. South Korea issues an unusually positive statement about cryptocurrency regulation just 24 hours after a vocal anti-crypto regulator is found dead at his home. Venezuela launches a petrol-backed crypto, creating a vehicle to create investment despite its sanction. Those are your headlines. You're watching Crypto Trader on CNBC Africa. This week, we're coming to you live from Dallas, Texas, where we're covering the Bitcoin and Ethereum Super Conference. And this is a super conference indeed. It's got all the biggest names in crypto right here. Over the next 30 minutes, I'm going to try and track them down and get them to sit in the hot seat and tell us what their predictions for crypto are for 2018. So stay tuned. Where do you keep your crypto? If you're anything like me, your crypto is stored on a selection of wallets, online, offline wallets, and you're earning no interest on your crypto, which is kind of counterintuitive. Well, at least according to Alex Mashinsky, who's from this Celsius network, and says that we should be earning interest on our crypto. Alex, how?
Well, you should be earning interest and you should be getting low interest loans, right? So if the community got together, the crypto community got together and staked its crypto and allowed other people to borrow against it, as well as borrow against your own crypto, you would be able to get much lower interest rate from the community, as well as get much higher rate paid to you as a crypto holder.
But Alex, so let's take a step back, because you're using big words. You're using words like stake, and a lot of our viewers don't know what that means. So we do know of other lending platforms where you can borrow money against your crypto. Those are out there. How is Celsius different?
So the guys that are out there today have basically raised a little bit of money and are lending a little bit of money. If you try to actually get a loan there, you will be waiting on a very long line of people who are also trying to get those loans. The difference between those companies and Celsius is that Celsius managed to convince a very large financial institution to partner with us. And one of my backers agreed to lend billions of dollars, not millions of dollars out. So we're not going to have a line. And we're not going to have, you're going to get your interest earned as you deposit your coins into the Celsius wallet.
So let me understand this. So Celsius is a wallet. I deposit my crypto into the Celsius wallet. From the moment I deposit my crypto, I start to earn interest.
You get to do two things. One, you can get a loan against your crypto. So you deposit, let's say $1,000 worth of crypto, you can get between $400 and $500 as a loan at less than 10%. We will charge about 9% interest. That interest that we collect is then redistributed to all the other members of the community because they allowed us, their crypto is what allows us to get these, all the capital from this financial institution.
So if I got the facts right, I put in $1,000 worth of Bitcoin, you will loan me $500 against that, and you'll charge me under 10% for the loan.
Yes.
That's 10% per year.
Per year, yes.
Per year. Now the 10% that you earn goes into
Say
a
9%,
pool.
that sounds much better.
9%, because you said under 10%. So I take this interest, and you put the interest into a pool, and the pool is shared amongst your token holders. I think I'm smart enough to realize that here what I'm doing is I'm actually getting money, fiat money, against my crypto without a tax event, because I'm not actually selling any
That's exactly
crypto.
what you're deferring your tax event. So all the rich people in the world do that every day. If they own Facebook or Google, when they need cash, they don't sell their Facebook stock. They just go to their broker dealer and say, hey, can you lend me dollars against my Facebook? And the broker dealers are very happy to do that. They're very happy to give you a loan against it because they have an asset. So we are the first ones in the crypto community who convinced a major financial institution to treat that crypto as an asset and allow us to borrow dollars against it.
Okay, now you're doing a token sale. Tell me a little bit about your token sale.
So we're in a pre-sale right now. We're accepting accredited investors. You can go to the Celsius.network is our website and register. You can basically get a bonus on a 20 cent per token. The public sale is on March 15th, and the price is 30 cents per token.
And how many tokens are you issuing, and what is this token actually for?
So the token is, we're issuing 500 million tokens. Anything that's not sold in the pre-sale or the public sale will be burned. And the token is the smart contract. So basically, when you pay your interest to the community, you're buying tokens, they go into a smart contract, and the smart contract distributes tokens to all the coin holders.
So can you be part of the network without buying Celsius tokens?
We only lend to crypto holders, and we only lend to Celsius network members.
So you're not one of these ICOs that's taking a chicken approach, saying, yeah, we'll have a token, but you can also use other cryptocurrencies.
No.
If you want to be part of this, you got to have Celsius tokens.
We believe that, we ran out of anarchists, we ran out of libertarians, and now we're running out of speculators. The next 100 million people to join crypto are people who need a loan or want to earn interest. That's my view. That is the next big thing that's going to change the world.
Awesome. Alex, so if our viewers want to get more information, where can they go?
www.celsius.network, or join us on Telegram at celsius.network.
That's www.celsius.network. Sounds amazing. I'm going to move my crypto to a Celsius wallet. $1 million by 2020. Well, at least $1 million by 2020, or he'll eat his own genitals. That's what John McAfee said. John, why $1 million? Why not 1.5 or 2?
Well, I'm a very conservative person, and I seldom lose bets. I chose a very conservative number, one which is absolutely impossible for me to lose, because I think the true value will be many times that. And how did I reach the value? The way I do most things, backwards. Instead of taking what happened and project it forward, the nice thing about Bitcoin is it has a finite end, when the last coin is going to be mined, or even 10 years from now where there are very few coins left. So I'm thinking, okay, so there's 10 coins left, or whatever, and we have 100,000 miners, and we're spending $1 billion a month trying to mine this coin, which might take us half a year. What's the value of that coin? It's got to be in the trillions of dollars. So if it is, because we know it's going to be mined, and it's going to have some value, and if we're spending billions to get it, it has to be worth many times more. So let's say it's $1 trillion, a very conservative number, and let's work backwards. Then $10 million in 2020 is about the right price.
So it could be anywhere. I mean, from what you're saying, if it's equivalent to the investment in the miners in the network,
it has to be, else they wouldn't be mining, would they? See, this is a business. I was with one of the world's largest miners. We're not going to mine something we're going to lose money on. Of course not. If we're mining it, it's going to be worth a fortune. And we're going to have to cooperate with each other, because I'm not spending $1 billion and everybody else to get my competitor, get the last coin. No, we're all going to cooperate and go, whoever gets it, we divide it equally. All right, so no, $10 million is more like it, but $1 million is safe.
So you
have
think
to trust me, I will win that bet.
You're Irish, and you said that being Irish, you've never lost a bet. So.
I've never lost a bet. My wife's been with him for quite a while. She will tell you that I've done 1,000 bets. I've never lost a bet.
So John, why did you exit the mining business then? You mentioned earlier that you exited the mining business a few weeks ago. If you're so positive about this infrastructure that's being built, why exit?
Because you think that life is all about money? No, it's a boring business. I'm sorry. A 12-year-old could run that business. There's no excitement. There's no adventure. There's no creativity. There's no. I just got tired. I mean, sure, money. We're making money like crazy. It's like having a license to print your own money. However, this is boring.
When you exited the mining operation, how big was the mining operation?
It was about 11,000 S9 machines.
11,000 S9 machines.
Yes.
And where were they hosted? Where were you guys?
I still can't tell you, because the company still has that information. I mean, that would give my competitors a leg up.
And what are you spending your time on today?
Oh, I was spending over half of my time in cryptocurrency even before that. I'm spending it all in mostly ICOs, because initial coin offerings are the future of this industry and of our world. And it's from these ICOs that the magical creativity that's going to change your life and the lives of your children is going to come from. So that's exciting to me, and that's a lot more fun than sitting around looking at the temperature outside and trying to calculate how much electricity I'm going to use. No, that's not fun.
So we're going to spend some time talking about ICOs because it seems like ICOs are really back in favor these days.
Yes.
During the little correction that we had a couple of weeks ago, you seem to be keeping your wits and telling people that it's actually nothing.
It is not.
What is the basis for that? The market
The
went
basis
down
of this
over
is the
50%.
mathematics of this industry, okay? If you look at it, you know, I buy everything with cryptocurrency, almost everything except coffee and, you know, a donut.
Because the transaction fees are too high?
No, I buy everything, but no. Well, Bitcoin transaction fees, if you have noticed, have come way down from $30-some to a couple of dollars now. Ethereum transaction fees are frequently free, depending on which wallet you use. No, it's not the transaction fees. It's just the fact that, isn't it easier? Isn't it easier just to go click, pay for this, than it is to go to the bank or to write a check or to send a wire? No, it's 100 times, 1,000 times more simple. So if you have something that is that powerful, how are you going to stop it? How is it going to just die? It will not. And it's kind of like saying, oh, the automobile is great. You don't have to feed it. You don't have to, you know, put a saddle on it. You don't have to worry about it getting old. And no. It did not matter what the people who manufactured horse buggies wanted to say or do. The car was coming.
But what about all these threats or noises that we're getting from the governments? I mean, the crash a few weeks ago started because of the Indian government issuing statements and
Yes.
the SEC being a bit less than neutral on cryptocurrencies.
But if you keep your wits about you, you will see that there's no possibility of enforcing any of these things. None. I mean, so how can you possibly enforce something that you can't see? Especially with the anonymous and the privacy coins. How in the world is no one knows that I'm even using it. I'm going to break into my house and look at every application on my computer? No, please. It's not possible.
So have the government's lost the fight already? Is it too late for them to stop
They lost
crypto?
the fight as soon as Satoshi wrote his paper. That was the end of the war. Because the mathematics, I'm a mathematician, the math in that paper is kind of like when Newton discovered the laws of mechanical motion and said, oh, I can guarantee you that Mercury is going to be right here in 5 years. Well, it is, always. And the same thing with this white paper. It is guaranteed. Nothing can stop it. I don't care how angry you are that it's not a full moon tonight. It's not going to change.
So the governments have lost the war and we're well into 2018 and the market seems to be on the up. What are the big drivers for 2018? What's going to bring in the next wave of money to drive the crypto market cap up?
Distributed exchanges, number one, pure and simple. And applications with social value, like the one that I talked about, the your allowance, okay, between parents and the kids, where you get an allowance for doing chores, okay. The way it stands now, you do them, you usually get your allowance anyway. You got a smart contract. Okay.
Between the child and his parents.
Yes, got a smart contract. Okay, here's the money. It's already in escrow. Okay.
So I mow the front lawn.
That's right. I mow the front lawn. I get the money, but I forget to mow the back. And the father said, "Hey, the smart contract. What did it say? Front lawn, back lawn." Okay, so you don't get your money. Mow the back lawn. It's beautiful. What does it do? It brings negotiation between parents and child. Isn't that better than nothing? Which we have now. Child lost in his smartphone or his computer playing games. No, it's bringing families back together. Do you see the magic of the blockchain?
It's the real world application of the blockchain. What about the institutional money? Can we expect institutional money to start flowing into blockchain? We've been talking about institutional money for many, many years in the blockchain, and to date, well, they've been slow to arrive. Where's the money?
Well, there's not going to be much coming in because investors invest in companies, don't they? What does a company mean in the crypto world? A company is something you just create in order to start the flow of your tokens, and then it disappears, right? There's no company left. So investors go, what am I investing in? So the only way that investors can invest is to buy the tokens themselves. Big difference.
And
I don't think that's going to happen.
And institutions are not going to buy use case tokens?
Pardon?
Are institutions not going to buy utility tokens or use case tokens?
No, because they view this compressed chart as being volatile. No, it's not volatile. It's as predictable as General Motors. It's simply compressed in time. Says, oh my God, you lost 20% yesterday. Oh, who cares? This time next week, let's look at it. It's going to be fine. So no, they have no basis for an investment. They go, oh my God, what? I have no clue what's going to happen in money.
So John, I'm not going to let you off the hook. Every time I get guests on my show, I ask them, if they were to hold 5 tokens for 3 years, no buying and no selling, what are your 5 tokens?
I'm not going to say.
You're not going to say?
Of course not, because people accuse me of pumping again or promoting for my own self-interest. I'm sorry, but no, I will not.
Okay, will you talk about any ICOs that you're excited about? I mean, you did mention a few that you are excited about. And no shilling, just real-world applications of stuff that you see. I know you're exposed, and there must be stuff that you're really excited about.
Okay, well, here's one. It's one called Docademic. DOCADEMIC. It's a South American company that already has in place millions of users and thousands of physicians around South America to provide free consultation. In fact, I did one myself last night just to try it. I'd never tried it before. So I was sitting with the developers and I said, here's the app, and I'm going to go on, and sure enough, there's a doctor. Whoa, where did you come from? And there's my little picture up in the corner, live, and for free. Now, yes, I'm excited about that.
That's changing the world.
It's changing the world. Somebody in a remote village in Venezuela, up in the mountains, can talk to a physician live, 24 hours a day.
What's that ICO called again?
Docademic.
Anything else that you're excited about that's really changing the world?
I've already spoken about the Euro allowance. I think the Euro allowance, I pray that this is going to be the first ICO where people don't just grab the coins because it's going to go sky high and keep them, but say use them. Use these coins with your kids, please God. Let's do what we intended to do.
John, you take a lot of flack on Twitter. Every time I look at your Twitter, no matter what you say, no matter which coin you pump, people are after you.
Yes.
I mean, that can't feel great when you're reading your Twitter and you see people after you. How do you deal with it?
Listen, I learned a long time ago that what people think and say has no meaning whatsoever in a person's life. In America, we have a saying, sticks and stones may break my bones, but words and ideas will never hurt me. And that is the truth.
Sticks and stones will break your bones, but words won't harm him. That's John McAfee. Is 2018 going to be the year where the masses get into Bitcoin? And I think we can only answer that by answering one simple question. Is 2018 going to be the year that your mother buys crypto? Dr. Julian Hosp is the founder and president of 10x. Dr. Julian, is 2018 going to be the year when your mother buys into crypto?
Well, I'm not sure if my mother buys into crypto, but I think a lot of mothers are going to buy into crypto. I think 2018 is going to have a big mass adoption, actually.
Why is your mother not going to buy into crypto?
First of all, she is not the most financial savvy person. I think she looks at her son and is proud of what her son does, but she's retired. She's happy in where she is.
Does your mom use the internet?
She does.
So why can't she use crypto?
She owns crypto, so let's say it this way, but I think she owns crypto because I bought crypto for her and I helped her with all this. I think she just has different interests in life, right? But I think she could in 2018. I think it's going to be there.
What are the barriers for the masses to get into crypto? Why don't we have the masses in crypto at the moment?
I think a lot of companies are really looking into quite high-end or very kind of deep down things. They're trying to solve those rather than focusing on very simple things like with a click of a button, how can you get from fiat into crypto? Or how do you store your private key? What are really secure measures? And I think there's too few companies trying to solve these boring cases, but these cases will be really, really, really profitable.
And is 2018 going to be the year when this is solved, when you can actually buy and store tokens with one click, move fiat into crypto with one click?
I think so. I think banks are more open now. I think the regulators are going to be clearer. I think companies really start offering solutions. The private key solution is going to get solved. I think that's 2018 is going to be a very powerful year because of that.
And what about scalability? I mean, we saw CryptoKitties cripple what is the most powerful blockchain in the world today, the Ethereum blockchain, and that's one application. What happens with scalability? What can we expect?
So I think we're going to see these second layer solutions on Bitcoin with Lightning Network. I think Ethereum is going to have some breakthroughs with sharding and again, second layer solutions. And I think what it's going to come down to is that blockchains, how they are today, are going to be very stable, very secure. They're going to provide the infrastructure, but the actual applications will happen on the next layer. And I think that's going to be the future, and we'll see this year.
So something like what's happening with Lightning and Bitcoin, where the
Correct.
Lightning network is doing applications off-chain and then transacting with the chain once every now and then.
Correct. I mean, we see this with Lightning now. I think on Lightning at this very moment, we have 600 nodes live. We have liquidity in the system. There's transactions happening. It's the start, and it's going to be a hockey stick. It's going to be nothing there. And I think that's what we're going to see there.
And what about crossing over from blockchain to blockchain? Will that not solve the scalability problem? If one blockchain is full, just transact on another one and a third one.
Definitely. I mean, that's also an area where we at 10x are working on with Comet, where we really try to solve how can we have these cross-chain transactions, instant, super secure, trustless, meaning you don't have to trust anyone. There's just some challenges to solve because obviously every blockchain is different. It's like, it's not comparing the dollar to the euro, it's comparing gold to flowers because some currencies, they're so different, right? And I think there's still some hurdles that you have to jump, but once this gets solved, and I also think it's going to get solved this year, that's going to be truly making cryptocurrencies agnostic and very relevant for people to come in.
So we think that if we connect the blockchains, it does make blockchains agnostic and solve the scalability problem. You mentioned something called Comet, and I think you spelled it C-O-M-I-T.
Yep.
What is Comet?
Basically, it's a cryptographically secure, off-chain, multi-asset, instant transaction network. So it is nothing else where you can transact between blockchains instantly, really, really secure, and you can do this immediately through the entire network. And the idea behind it is that you don't need to own all the coins, you just want to control them actually. And so as long as you can control any coin with the coin you're holding, it becomes agnostic. So the worry is not, should I buy Bitcoin, should I buy Ethereum, should I buy Dash? No, it's you buy one and you can control all the others.
So are you comparing blockchains to intranets in this example? So are you saying that the Bitcoin blockchain will be one blockchain and the Ethereum blockchain will be another blockchain? How do you connect the two blockchains?
I think it's a really fantastic example. I mean, the intranets in the past, 40 years ago, universities, for example, or corporations, they had these intranets set up so they can communicate among each other. But let's say a university wanted to communicate to another one or outsource some power. They had to communicate with each other, but they didn't necessarily want to trust each other. So they had a TCP/IP protocol, and that did all the work. And so with blockchains being these intranets, you could do the same, and that's why we are working on a Comet routing protocol, CRP, that is exactly doing this communication between blockchains.
So Comet is going to serve as a TCP/IP layer between blockchains. How will it work?
The idea behind it is, first of all, it should be open source. We're running it under the MIT license, which allows for usage, but doesn't allow to commercialize it. I think that's the first really important start. And the other thing is, it has to define rules that most of the blockchains have today. And so actually there's 3 rules. One is multi-signature, which just means there's several people who have to sign a transaction. The second one is a hashing functionality, which means you can only do something if I give you a secret, and then you can actually execute something. And the last one is a so-called time lock, which means if I go offline, you just have to wait a certain amount of time until you get your funds out.
So let's use a practical example. Say that I've got Bitcoin and you've got Ethereum, and I want Ethereum and you want Bitcoin. Practically, how would we transact using Comet?
So let's say I would have Bitcoin here in my left hand, and you have Ethereum here in the right hand. And so we have a multi-signature account this way. And then if I reveal a secret, you automatically get my Bitcoin, but then I automatically get your Ethereum. And let's say we go offline or you go offline, then I just wait a certain time, let's say 24 hours, and then I automatically get my Bitcoin back and you get your Ethereum back. So we wouldn't have to trust anyone.
So it's totally secure. What do you need the time lapse for?
You mean the time lock?
Yes,
yeah,
the time lock.
So imagine the other person goes offline. So let's say you go offline. Then my Bitcoin would be stuck in there because I need your secret to actually get my money back out. But if you go offline, I never get your secret. So for me to not have my money stuck in there, it's a predetermined time, 24 hours, and then I automatically get my money out.
Now, is this an idea or is this something that you're actually implementing today?
No, so we're working actually on the testnet. I mean, the reason it's still in the testnet is because there's always it's something new, so there's always some kind of things you have to test or fine tune, and so we're not ready yet to release it to the public because it's not finalized, but it's really being worked on, and this year we're definitely going to have libraries out for developers to actively work on themselves.
Now, I understand that, or if I understand it correctly, 10x is a debit card, a crypto debit card company. Why is it in 10x's interest to create this Comet?
So we envisioned the future is without debit cards. So we envisioned and said, okay, if we don't have debit cards, will everyone agree on one blockchain, one cryptocurrency, or will there be a lot that have to interact? And so we realized, or this is our vision, that we will never agree on the same cryptocurrency. It will all be different ones. So how are these cryptocurrencies connected? Today, Visa, for example, or MasterCard do this with their infrastructure. And that's why they're so valuable. So we believe if we build this infrastructure, that's what's going to be really, really bringing a lot of value to 10x.
So what is the future of Visa and MasterCard? Everyone's been talking about the fact that they've become very scared of cryptocurrencies and cryptocurrency debit cards. What's the future for Visa and MasterCard?
I'm not sure if scared. I think they have respect. I think a lot of these large companies, banks, credit cards, and so companies and so on, they know what's happening, and I think they're trying to figure out their place, where they should be. And I think their place is going to be somewhere in the mix between the old traditional world and the new virtual world. I don't think that everything in the future is going to be decentralized just because it's so clunky for people to access it. So these companies will actually have a very good place if they find that middle between decentralization and centralization.
Watch out, Visa and MasterCard. It sounds like 10x is coming for you. There used to be a time when the stock markets used to crash, people used to flock to gold as a safe haven. A few weeks ago, the Dow Jones crashed, and people, well, they didn't flock to gold. Are they going to flock to Bitcoin one day? Valentin, can we expect a flock to Bitcoin one day when the markets go down? Is Bitcoin going to become the new digital gold?
Actually, I think Bitcoin is already a type of digital gold. It's just that people, they get ahead of themselves when they think about what kind of status and what kind of market dynamics is going to happen when. So for example, Bitcoin already had a crash before the stock market crashed in December. But then when the stock market crashed 10% in a week, which is significant, Bitcoin actually went up. So I think the assets are still relatively uncorrelated, but as always, and that counts for gold too, if you have a massive deflation in credit money, bank money, which is being used to buy other assets, then at least there's no new money coming into crypto. For example, the play was the hot money, the retail, they pushed the price up to 20K. They got burned because they went and borrowed against their houses and their businesses, put it into BitConnect. They're not coming back so soon. The game was the institutions were going to come in and say, hey, let's put in 5% of our portfolio into Bitcoin. You know, we don't really understand it, but let's put in a little bit because we're missing out. Now the market's down 50%. First of all, the Bitcoin market, they're like, well, maybe we should wait a little bit. And now the stock market is down 10%. They're like, okay, wait a second, we have to de-risk anyway. Maybe let's shelve the crypto project for another year or two. So if the central banks keep the deflationary course, if interest rates keep rising, in absolute terms, you're not going to see new highs in crypto until 2020.
So you really think that a deflation in the stock market is going to have an effect, and maybe even a downward effect on the Bitcoin market? Because what you're saying is new money won't enter the market.
That's it. Basically, the symptoms are that the stock market is just a symptom of credit contracting. And you still have to understand when you look at Bitcoin in fiat terms, that's what you're using. If you transfer money from your bank to your exchange and buy Bitcoin, it's credit money that you're using. That's the money that institutions would be using. But if their accounts in the stock market, maybe they're losing on bonds too. If they are being drawn down, they don't just have that much money and they don't have the risk appetite to move into crypto.
So what's going to be the next flood of money into crypto? What's going to be like the next sleuth gate that opens and brings in a whole lot of new money?
Okay, so here's the other scenario. So now we have the deflationary forces. The Fed is tightening, treasury rates are rising, companies are, some of them are defaulting. You have the crash in crypto. But let's assume the Fed says, in a month or so, the Dow Jones is down 30% now, 2018. That's too much. And we're going to start printing money again, like in 2008, right? Then you can see Bitcoin at 20, 40, 50K at the end of the year, because that's going to reboot the credit cycle, flush worthless fiat money into the system, and then the people are going to start looking again, oh, now I've got all this new money, where do I put it? Actually, stock market is kind of expensive. Yeah, let's put some of it in Bitcoin.
What you're saying is very exciting, because if I summarize what you're actually saying is that Bitcoin and crypto has become a bona fide investment class. And if that's the case, then it means that it has to react when other markets react. So you're saying the Dow goes down, maybe Bitcoin will go down, maybe Bitcoin will go up. If the Fed prints more money,
Bitcoin will definitely go up.
Bitcoin will go up.
Definitely go up. We're not quite there yet. You see, the game plan was for the institutions, family offices, some investment funds to move in big in the first quarter, but two things happened. A, we had the crypto crash, and B, we had the stock market crash, so they've shelved those plans. But again, if the central banks become soft again, they start printing money again, those plans are going to come back out of the drawer. They're going to be like, okay, so we had all the calculations ready, we are on, financial system is stabilized, now we're going to move into Bitcoin. And because the total market cap is so small relative to everything else, you got 25 trillion in stocks in the US alone, you get 21 trillion in government debt, you get 100 trillion in credit market instruments. It doesn't really take much of that to double, triple the total crypto valuation.
Surely fund managers today are looking around and saying, look, we've got no returns in gold, there's no returns in oil, the markets are, pretty flat and not really giving returns. There is one place out there where you can go and get returns, and today that place is crypto. Surely this is what's going through a fund manager's head to know?
Absolutely. Again, on a relative value basis, crypto is undervalued. I mean, look, every project is different, but let's look at the whole market. It's undervalued relative to other asset markets. However, it also has a higher volatility and higher risk. So the fund managers are only going to take that risk if the general conditions are good. And right now they're tipping from good to more unstable. So as long as we are in a risky environment, stocks, bonds, you name it, then the fund managers are going to be like, well, let's wait with the super risky stuff. But if we flip back to straight money printing and everything's great scenario, then they're going to be like, yeah, let's buy that, hard crypto stuff. We can make 100% in a year, and let's move in there.
Yeah, crypto is indeed the only place that can make 100% in a year. And that's a wrap. Another week, another conference, and another plane to catch to get back home. I'm glad we finally managed to get Mr. John McAfee himself into the hot seat. And you know what that means? It means that there are only 3 big names left in crypto that we haven't had on our show. We haven't had Vitalik, we haven't had Tedemiester, and we still don't know who Satoshi is. Next week, I'll be back in Johannesburg at our CNBC studios. Until then, my friends, trade well.
Crypto Trader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.